Welcome back to my channel, Wealthy Women Daily. You've probably heard the term blue chip stocks when reading articles about companies like JP Morgan Chase, Walmart, American Express, Apple, and other top companies, but have no idea what blue chip means. Don't worry about it, I was there before, and it's not as complicated as you may think. I'm Charlene Reinhart, and in this video, I'm going to break down blue chip stocks so that the concept can forever be clear and understandable. Don't forget to subscribe to my YouTube channel below for more insights and tips on smart investing and building your net worth.
Okay, we have another dividend invest her or earn her term coming your way, and that's blue chip stock. What are blue chip stocks? Well, they are typically the best of the best. Right here, you will see Procter & Gamble, Clorox, Kimberly-Clark, Coca-Cola, Lowe's, Colgate-Palmolive. And if you hang around the financial world, you'll hear a lot more blue chip stocks. You'll hear that terminology because people are looking for high quality stocks. They want the best of the best. Now, when I first heard the term blue chip, I was wondering why the heck are they calling it blue chip? Well, it dates back to the days when people were playing poker in the casino, and the blue chip was typically the most valuable chip. So in the early 1900s, they coined the term blue chip to represent the highest quality stocks in the stock market. It's reserved for the best of the best. Now, how do you know if a company is potentially a blue chip stock? Well, here's some typical characteristics. One, they are large. Many of them are worth over 100 billion. But let's say the price falls, the value falls. That doesn't mean it's not still a quality company. Things could have happened. And so you want to understand what's going on in the market, in the environment that could impact those valuations, right? You also want to look at their track record of generating revenue. How long has the company been generating revenue, and does the revenue continuously increase? That's something to consider. And what could potentially reduce the amount of revenue that the company is earning? You also want to see if they have a consistent history of paying dividends and raising dividends, because we want to keep up with inflation. If we don't, our money is not as valuable. So it's a company raising their dividend so that we can keep up with inflation. These companies that you see here are typically the financial kings of their industry. They generally have strong income statements and balance sheets. And we all know where to go to look at those income statements and balance sheets, right? We can go to a company's investor relations page on their website, or we can leverage good old SEC. They have their EDGAR database with a listing of all companies that are publicly traded and their reports. Now, you should know that these are typically the most reliable stocks in the market. You typically are getting dividends from these companies, and they are pretty mature. They're mature businesses, steady and reliable. So that's why people typically look towards blue chip stocks when they're investing, because they want the best of the best. They want companies that are the cream of the crop and that make it hard for anybody else to come in and get market share. So if you hear dividend stocks that are blue chip companies, don't get intimidated. Now you know the best of the best.